Hello guys, you're welcome to Forex CMC trading on YouTube. On today's episode, I will be teaching you the best ICT strategy for trading indices. Before we hop in, we have just a couple of things. Number one, just make sure you subscribe to this channel if you've not done so, and turn on the bell notification so that you will not miss any of my YouTube videos, okay? Because they are educational content and it will help your trading a great deal. And in this video too, I will include my life example videos. My last example trade is a trade I took using this strategy. It's a very good strategy that was taught by ICT, that is a NASDAQ trader. Then secondly, whatever I put to you here, it's not a financial advice, so it's my belief of the marketplace. So just demonstrate this information I'm about to give you on a demo account before going to a live account, guys. So we haven't said that, let's hop in right away. Now the best ICT strategy I use for trading indices is 2022. Okay, it's 2022 model, which he called the fair value gap, model. Now I will teach you how to trade this and how to go about it. Now his fair value gap model, how does it look like? Okay, his fair value gap model, it's very easy. If you can go to his own YouTube channel to watch it, but we just do an abridged version here. Okay, do an abridged version here. So let's go. His 2022 model, that is a fair value gap model, has a couple of things that he made mention of. Okay, which is the buy side liquidity, or the buy side liquidity. Okay, then he made mention of the sell side liquidity. Then he made mention of the last one, which is the fair value gap. Okay, fair value gap. Okay, there are four actually: fair value gap. Then the last one is the market structure shift. Okay, market structure shift. So these are the four things I will be explaining. Okay, I'll be explaining them. And if you watch my previous video, you will hear me saying something like my buy side liquidity and sell side liquidity. Okay, so in this video I'll go deep into it, because actually from this video that he generated those concepts. So let's go right away. Now let's say you have a structure like this, market structure. Okay, let's assume you have market structure like this. Now above here are liquidity. Okay, then below here too are liquidity. Okay, our liquidity. Then the above here, the liquidity that is present here is the buy side liquidity, and the liquidity that is below here is sell side liquidity. Why is that so? Because this liquidity will be grabbed by buyers. How? If someone is buying up, okay, and breaks this, so you will agree with me that was buy pressure that took this liquidity. So that's why it's called buy side liquidity. Then vice versa, sellers coming here, they take this liquidity, so it's sell side liquidity. So that is that. Then fair value gap, which I also explained in my previous video, that if you have a candlestick like this and you have another candlestick, okay, like this, I hope you're following. Just watch the end of this video, guys. I will drop a live example video and you see how powerful this strategy is that was taught by ICT. Kudos to him. Now, okay, now the candle that has just one orders, that is just either buy or sell orders, That is the fair value gap. Okay, when when sellers didn't come into trade into this area, this is our fair value gap, or which you also call our imbalance. Okay, this is our fair value gap or our imbalance. Okay, which you can, for short, you can just call it IPA, that is imbalance price action. Okay, imbalance, let's just call it for short IPA, imbalance price action. So having said that, structure market structure shift, that is, if market was bullish, okay, then it's give a break here. Okay, so the market structure has shifted from bullish to bearish. So we'll be expecting bearish move from then henceforth. So then, having explained all these concepts, how do we merge them together? Or how did he merge them together? It was very simple, that if there is a buy side liquidity here, and it's a sell market, you will expect market to take the buy side, then give a lower time frame, like 5 minutes, let's say 5 minutes or 15 minutes, you know market structure shift. Okay, then you enter at the imbalance. Okay, you enter at the imbalance. Let me see if I can use as videos to explain it. Let me see if I can use my charts to explain it. It's a very simple concept, actually. Okay, so let's assume, let me use this drawing first. Let's assume this one is 4 hour time frame. For instance, let's assume this is a 4 hour time frame. This whole thing is a 4 hour time frame. Okay, then let's assume this is let's say a 5 minutes time frame. Okay, this is a 5 minutes time frame now. And let's assume this price is here at this point. Price has taken the buy side. Now this is what is happening. Let's say this is what is happening on the 5 minutes time frame inside of this place. Okay, now if his strategy is such that if there is a very strong push down, okay, that cause a market structure shift, that is, that candle must be energetic, that is a very strong bearish candle. Okay, if there is a very strong bearish candle, then we'll wait for price to come, because if there's a strong bearish candle, certainly to create an imbalance inside of this place. Now when price trade into this imbalance, that is where you take your trade from. Okay, now having said that, let's hop in to our chart as we look at this on the chart. Okay, so let's use this now. Let's use this. Now let's assume, let me make it a bit bigger. Let me make it a bit bigger. Okay. Now if you check this very well, this is liquidity right here. Okay. So call this a buy side liquidity. We'll call it, okay, this is liquidity right here. And if you check here, though it's not, they are not equal lows, but this liquidity also here, we can take this. This is the first liquidity level here. Okay, then this is another liquidity level here. Okay, so another liquidity level here. Then we see price coming to tap them. Okay, so these are sell side liquidity, because they are liquidity that are taken by sellers. Okay, sell side liquidity, just like that, sell side liquidity. Okay, so if you want to take this, the first thing you do is just you know this is your first take profit and this is second take profit, just like that. Okay, I hope that is clear enough. Now having said that, let's go to a lower time frame. This is now buy side liquidity has been taken here, We'll go to a lower time frame to see what happened right there. We'll go to 5 minutes time frame. This is how I trade it, guys. I don't enter on a higher time frame. I don't enter on the same time frame that when the liquidity is swept on. Okay, so liquidity was, this is our buy side liquidity, as you can see here. Now, when this buy side liquidity was taken, please take note of that. Was there an energetic move? Yes, there was an energetic move, guys. There was an energetic move, guys. You see this? There was an energetic move. Okay, you see this energetic move created an imbalance right here. You see an imbalance right here, very small. So that's why you have to try your best to be able to spot it. Okay, an imbalance right there. Price came into it. So if you want to take this trade, for example, how do you take it? You just simply pull your sell here, and you sell at that imbalance with your stop loss above this week. Okay, above this week right here, because this is our last push up. Then targeting this as our first take profit and this as our second take profit. So you see that price came to that imbalance, tap it, sold, came back for redistribution, and price has been going lower from that particular time. Okay, so it happens on all time frame. It's not just this alone, it happens on all time frames, especially when the New York Stock Exchange market is opening. It does this a whole lot. It does this a lot. When the market is opening, it does this a lot. Okay, now look at this. Now look at when it's happening on the same time frame. Look at this. This is liquidity here, resting here. Okay, price uh took this liquidity here, created an imbalance here, created this imbalance here, and after I created this imbalance, let's spot it here, an imbalance. If you want to take this trade, you just put the trigger right here, and you target stop loss above, then you target this this liquidity level here. Okay, this is our sell side liquidity. So you target this, that is over 1:2, which is okay, or you just let it, you just target this imbalance as anyhow you want to do it. So that is it, guys. Let me see if I can see more examples on this. It's, you can see, littered around all time frames. Okay, littered around all time frames So we are expecting a bullish move. Price sometimes will go bearish, to take sell side liquidity before going higher. Okay, before going higher. So let me see this. Okay, look at this here. It happened here also. Okay, price swept this liquidity here. If you look at the lower time frame, you may see that energetic move. Swept this liquidity here, then came above and swept this liquidity resting here. Okay, it happens on all time frame, guys. It happens on all time frames. So that is it on this. Now let me show you an example I took on this particular using this particular model. So this is my where I record my trades. So this is it right here. Okay, this is it right here. Now this is when price took that liquidity. I was so much on the chart when this happened. Then I went to lower time frame, spot this imbalance right here, and price started going like that. Okay, started going and stop. I mean, take profit was hit. So you see, price, did that. These are my actual executions. You see, I entered off from there, and price, went to take profit, and that is that. So that is it, guys. I hope this was insightful. So just try this on the chart and you will be glad you did. It's a very great concept. It's a very great uh strategy for trading indices. Now let me also show you one from US 30, one good trade from US 30. It was a great one on US 30. Let me see if I can see that trade. You know, I it was a very great trade for me. It was a very great trade for me. Let me see if I can see that trade here. Let me see. Okay. Let me see. Okay, let's see to this first. Let's see to this first. So this is uh a buy side liquidity that was taken here. Buy side liquidity. Okay, BSL. Then here is our sell side liquidity. Okay. For me personally, I found out that how do you know that okay price will come this lower? Presence of look at imbalance here. That is like a double confirmation that price will come this lower. Okay, presence of this imbalance here. So here is also what is sell liquidity right here. It's a very powerful concept, guys. So just do well to watch the video again and again. Remember, if you've not subscribed, you're not doing yourself any good by not subscribing. Just subscribe and you will really enjoy the content from this sorry, enjoy the content from this video. So, and many more videos to come. So this is it right here. So let me see if it gave us that entry confirmation. Let's go to 5 minutes and see if it gives us that entry confirmation. Okay, let's go. Let's go. Let's see. Let's go. Let's go. Let's go. Let's go. Let's go. Let's see to that. I have to squeeze this in a bit and so that we'll get that very fast. Okay. Okay. So let's see. This was where price. Okay. Took this. It was where come in a minute. Okay. Let's see. Price took this liquidity here. An energetic move down. Okay, energetic move down. Then we see that there's a fair value gap here. Okay, now according to ICT, if you have there are two imbalances here. Once you have two imbalances, you take the lower one. Okay, the lower one, you take the lower one. So if you do that, you will enter, and price has been tanking from that time till now. So I hope this was insightful. Please do well to watch this video again and again. Remember, backtest so that this information can stick better. Thank you for watching. Cheers and God bless you.